Hello and welcome to Donatien Investment. This analysis is for Booking Holdings on Nasdaq as of 7th of August 2026 with a share price of $207. The full report is on donatien.ca, a wide moat, asset-like compounder at a fair multiple, forward PE approximately 16.8 times, approximately 14% below the $236 consensus. A Q2 beat reclaimed the 200-day, upgrading medium and long to buy. But the short call stays hold. At $207.39, the daily RSI 69.5 is overbought. Buy the pullback into $190.196. Start with the quality because it is what carries the medium and long calls. Booking is the category leader in online travel, a two-sided marketplace with more than 3 million properties, monetized at a stable 15% take rate that converts roughly a third of revenue to free cash flow and hands almost all of it back through buybacks. The second quarter print on the 4th of August confirmed the profile. Revenue of $7.35 billion, up 8%, operating income up 11%, and an operating margin of 34%, with room nights near records, despite the Middle East volatility management flagged. Quality scores 80. Here is the part that surprises people. The stock rose about 7% on the beat, yet the multiple did not re-rate because the beat rolled off a depressed year-ago quarter and rebased trailing earnings higher. So the trailing PE actually fell. Valuation scores 63, fair, a clean operating PE around 21 times against a warranted 22.6, and a forward PE near 16.8, with a peg around 0.83 for a low teens earnings grower. The free cash yield is about 4.8%, and the price is still roughly 14% below the $236 street consensus. This is what changed and why the horizon split. Post-earnings, the tape turned decisively up. The monthly, weekly, and daily are all uptrends. The daily reclaimed both its 50 and 200-day averages, and the tool rates the confluence strongly bullish. That lifts timing from neutral to improving, 61, which flips the base signal to buy. So the medium and long calls upgrade from hold to buy. The catch is the entry tick. At $207, right after a near 7% gap, the daily relative strength index is 69.5 overbought. So the short-term call is held at half size, one of three entry paths open. Buy the pullback into the low 190s, not the chase. The risks carry equal weight, and they are why the reward is only modest from here. The bear case sees the stock fall to about $172, roughly 17% below today. The lead trigger is fundamental, a soft third quarter guide or room night growth slipping below the sector median into a stagflation-like consumer squeeze, which derates a fair, not cheap, multiple. On top of that sits the structural competitive threat. Google Travel disintermediating the top of the funnel, and Airbnb taking alternative accommodation share, both of which can compress the 15% take rate. A re-escalation of Iran and Hormuz would retax travel demand through oil, though that acute shock has eased about 15% this run. And the macro backdrop is a headwind. Consumer discretionary is a medium-strong underperformed sector call. These are live risks, not distant tails. Now weigh the risk against the reward. The bull case is roughly 26% above today, the base case the most likely about 10%, and the bear case a fall of about 17%. So you are risking about 17 to make 26. So I'll call on Booking Holdings, on Nasdaq, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.